The euro falls on growing concerns that France's minority government will face a no-confidence vote as it forces through a budget bill. Australian retail sales are stronger than expected due to early discounting, and New Zealand's building consents stabilise. That's coming up in our 5 Things in 5 Minutes. And then, in our bonus deep dive interview, ANZ's Head of Asia Research, Khoon explains why he now expects a 5th consecutive year of depreciation for Asian currencies against the US dollar.
There's definitely going to be more hostile trade climate, which typically is one which will not benefit Asian currencies.
But first in 5 and 5 with ANZ. The euro was the big currency mover overnight, down 0.84% against the US dollar at 4 a.m. Sydney Melbourne time, as concerns grow around the stability of France's minority government. Opposition parties resisted budget proposals to cut spending and increase taxes, leading the government to use a constitutional provision to pass a budget bill with a minority, but in doing so, opening itself up to a vote of no confidence. Here's ANZ Head of G3 Economics, Brian Martin.
This is something that's going to continue well into 2025. Because there were elections last summer, there can't be new assembly or legislative elections before July of 2025. So that means really for the next 6 to 9 months, budget uncertainty is going to dominate in France. The government will be able to fund itself on a month-by-month basis by enacting special laws, but the ability for it to get any substantive improvement in the trajectory of the debt stock and trajectory of the budget deficit is going to be very constrained. And I think this is a factor that could well overhang the euro in coming months.
The US dollar index was up 0.7% at 4 a.m. Sydney Melbourne time, stronger than expected manufacturing data adding support. The Aussie was down 0.82% at 64.57 US cents, while the Kiwi was down 0.68% at 58.75 US cents. Number 2, the Chinese yuan and the Australian dollar have moved together and down against the US dollar in recent days, partly on concern about what Trump's tariff threats might mean for trade between the United States and the world's second largest economy, China, which is Australia's largest export market. Here's ANZ Head of FX Research, Majid bin Zaman.
They have been correlated in a way where it's broadly again dollar strength, which has really been a front and center since the Trump trade was being priced in the start of October up till now. And I think that's really been factoring into a slightly weaker CNY and also a weaker Aussie.
Number 3, the final components of Australian GDP figures for the September quarter are released today, including government finances and Australia's external accounts. ANZ's Head of Australian Economics, Adam Boyton, is putting the finishing touches on his final GDP forecast for the figures that are due tomorrow, which the RBA will be watching closely, in particular, unit labour costs.
We think we'll see a decline in the annual pace of growth in unit labour costs. We're expecting something around 3.8 for yearly growth in unit labour costs to the September quarter. The reason why the RBA will be looking at that is there does tend to be a reasonably strong medium to long-term relationship between unit labour costs and inflation. So if that can fall a little bit faster even, that would certainly be helpful for looking at a rate cut next year.
Number 4, Australian retail sales were stronger than expected in October, rising 0.6% from September. That was above the consensus forecast for 0.4%. ANZ economist Sophia Ngala says retailers appear to have enticed people to spend up ahead of Black Friday through early discounting.
We're now starting to see that households are starting to notice the impact of the stage 3 tax cuts, cost of living relief, and moderating inflation on their disposable incomes, and this appears to be supporting that upward trend in retail turnover. We continue to expect spending growth to recover from here and with near-term strengths. We'll be watching next month's prints closely as households participate in end-of-year sales events like Black Friday, which will be captured in the November data print.
Number 5. New Zealand building approvals fell 5% in October. That was slightly weaker than expected, but not outside of the typical monthly volatility, says ANZ economist Henry Russell. Henry says there has actually been a stabilisation in consents in recent months.
That's very reassuring. The falls to date from the peak back in 2022 has been substantial. So too was the rapid surge in construction that we saw in the early stages of the COVID pandemic. And so where we've ended up is largely on par with where we were pre-COVID. That's a pretty good result in the sense that following the GFC, where we also experienced a sharp slowdown in the construction sector, consents fell a lot further. That being said, we are still not building enough homes to keep up with population growth in the long run.
Henry Russell there. Now, for part 1 of a deep dive interview, ANZ's Head of Asia Research, Khoon explains why he now expects a 5th consecutive year of depreciation for Asian currencies against the US dollar.
This is largely based on our view that President-elect Trump will impose additional tariffs against China. Whether or not he does so against other economies in the region remains unclear at this stage, but there's definitely going to be more hostile trade climate, which typically is one which will not benefit Asian currencies. So we've revised lower our forecast for the Chinese yuan, for example. We're now forecasting it to weaken towards 7.50 next year. So we believe the yuan will have to play the role of a shock absorber to any increased tariff that the US will impose against China.
So what might Trump do with tariffs?
Well, President-elect Trump's social media posts about the additional tariffs against China and new tariffs against Mexico and China took the market by surprise. However, those tariffs were conditional on the various countries curbing the flow of illegal migrants and drugs. So it's still unclear whether or not those tariffs will in fact get enacted. And already we have seen just this week some positive comments from Trump regarding conversations he's had with the Mexican president and that Mexico will do something on their side in regards to the border. So in reality, we might actually not see that tariff being imposed. But what this tells us is that there's just going to be a lot of ongoing uncertainty around what the incoming administration's actual tariff plan will be, the scheduling, whether or not the tariffs are just a means of negotiating other matters. And hence, we're going to head into next year with just too many unknowns. But what is clear, I think, is there will probably be some form of tariff action. I think that is something we need to be prepared for. And I think that's something that currency markets at this stage have not fully priced in. And as we get more details and confirmation of any fresh US policies, I think that only then will we start to see the market price that in.
Could you talk about how the authorities in China can use the yuan as a shock absorber and whether they'll use the full extent of the shock absorbing?
Foreign exchange markets do play a very important role in trying to offset any impact from tariff measures. So, for example, if you look at the experience during the first US-China trade war, in 2018, under Trump's first term, the US started to progressively impose tariffs on Chinese goods. We saw the yuan weaken pretty much sufficiently to fully offset the impact of the tariffs. So during that period, the yuan played the perfect shock absorber role. This time around, we do expect the yuan to play a similar role, but given the potential magnitude of the tariffs that Trump might be looking to impose, we think the Chinese authorities will not want the yuan to weaken to the full extent of, say, 10 to 15% that might be needed. So that's why we've kept our forecast for the yuan to weaken to around 7.50, because I feel that a yuan that is too weak can start to cause potential financial stability issues for China, which they would want to avoid.
Khoon go there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, December the 3rd. Catch you tomorrow with part 2 of that interview with Khoon on Asian currencies and a final preview of Australian GDP figures and what that might mean for the RBA. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.